I want to talk to you about the most basic rule of economics, supply and demand, but specifically demand, actually, more specifically, shadow demand, a very important consideration when thinking about the housing market and predicting where the housing market is going. So let's talk about shadow demand. What is that? Shadow demand represents demand that is out there, but it is not yet seen in the marketplace. During the Great Recession, we heard a lot about the housing market and shadow supply, this inventory that hadn't yet hit the market. But now we are facing a different situation. We have very low supply, and we have a lot of demand that has yet to hit the market. So I want to do a brief analysis on this, and then we'll get to our interview today. So if you look at the number of adults between the ages of 18 and 34, we've got about 68 million of these people in the United States. And this is according to Wikipedia, about 120 million adults that are 25 to 54 years old. Okay, so these represent two big demographic cohorts for home buying trends, not really the younger than 25 group. We're going to divide these up even more. Let's look at the next slide. So here we see an estimated share of young adults living at home with their parents. They have not yet moved out. They have not yet formed their own household. So we've got the 18 to 24-year-old cohort, and we don't have to think too much about them. They're mostly in college or they're living at home. They're just starting out. They're not going to buy a house yet. They're not even probably going to rent a house yet in many cases. I mean, look at the numbers of them, right? For the last 3 years, we see this number hovering around 55 to 58% of adult Americans, 18 to 24-year-old, living at home. And interestingly, we saw this number increase during the pandemic, probably because they kicked them out of the dorm rooms, they kicked them out of college, and they came home to live with their parents during the lockdown periods. Okay, forget about this demographic, not important in terms of housing demand or household formation yet. They will be, but we'll talk about them on a much later show in the future. What we should focus on, though, is the demographic age 25 to 34. These are definitely people that should be out on their own renting a house, if not buying a house, but at least renting a house. So about 16% of adult Americans in this age cohort are still living at home. This represents shadow demand that we have not seen hit the rental market or the home buying market. So what does that really mean? Well, we've got about 68 million of them, right? Let's look at that. 16% equates to about 11 million people. To be exact, 10,880,000 people. Now, think about this in reference to the amount of inventory in terms of housing supply there is on the market now. The for sale supply in the United States is about what? You know the numbers. Come on, we've been talking about them all the time. Let's go with about 565,000, about half of what most people say it should be to be in a quote unquote normal market, right? The inventory is half. Now, we've been hearing about this shadow supply from the gloomers who have been wrong over and over again, right? Everybody from Peter Schiff on to all the rest of them. And, he doesn't really focus on the housing market too much, but a doomer much the same, right? As Robert Kiyosaki has said, he's predicted 19 out of the last 2 recessions. I love that. Okay, so all of the gloomers talk about this shadow supply, all these people that are supposed to dump their homes on the market, right? But we have explored ad nauseum why that's just not happening. And they've been predicting this for many, many years, folks. They've been wrong for a long time, not just recently, a long, long time. Remember, I've been doing this for 20 years, just working with investors. So, with all that experience, I've heard thousands and thousands, maybe tens of thousands of people with all of their opinions and their reasons why this and that is going to happen. So a lot of experience there, and they have just been wrong over and over again. Okay, so we've got these 11 million people that represent shadow demand for the rental market and the home buying market. And then we've got the folks, especially recently, that have talked about the short-term rental market and the Airbnb market, and how all of these folks are going to be dumping their houses on the market. And certainly some of them have, no question about that. But it has been a very low number, and it never happens all at once. So we definitely have not seen the threat of shadow supply hit the housing market, but we definitely, no question, have a lot of shadow demand. Remember, in 2010, I was saying that the demographics coming at the rental housing market are nothing short of phenomenal. And I renewed that prediction for another 10 years in 2020. So we'll see how it all turns out, but 11 million people are ultimately, the vast majority of them at least. Of course, you probably saw the movie Failure to Launch, and we definitely have some of that in society, no question about it. But by and large, most of these people, look, they're going to move out, they're going to form their own household, right? So think of the amount of shadow demand in reference to the amount of supply that is available on the market. A very big distinction. So let's take a look at this article. This is from Housing Wire, and it talks about predicting what's going to happen next year in terms of the housing market, right? Here's what you can expect from the housing market next year. Home prices will remain firm and grow in most markets. That's what they're saying. So on this first part of the article, they're sort of talking about the typical stuff, nothing too surprising there. But on this next part that I'm showing you, a couple of comments and segments that are interesting here. Number one, consumers will reset their expectations. And as rates move lower, there will be both more buyers and more sellers in the market. Obviously, this means increased transaction volume, which is great news for all of the people that have been complaining that depend on transaction volume. All the real estate brokers, the real estate agents, the escrow people, the title people, the lenders, the settlement attorneys, the home warranty companies, and so much home improvement, furniture companies, appliance companies, contractors, all of these people, when they buy a home, when they transact, they spend money. And that's why this segment of the economy is so critically important to the government, because they know that propping up the housing market, doing whatever it takes, is absolutely necessary, because it feeds into so many other segments of the economy. Now, remember, I told you this over 2 years ago. I told you that when the market shifts, we would see a lot of doom and gloom news, and people would have to face affordability problems. And of course, that all came true. But I also told you that people would ultimately reset their expectations. And that is now coming true. That's taken a while. It always takes a while for people to adjust their psychology and to kind of reset their expectations and just decide, look, we have what we have. We're going to buy what we can buy. We got to move on with our lives. And, even if we don't get that super cheap mortgage that everybody got a couple of years ago, even if the house is more expensive than it was a couple of years ago, we got to just move on. Okay. It's not the good old days anymore. It is what it is, and life goes on. And so people are doing that, no question about it, and they will continue to do it. They always do. I've seen the cycle happen so many times in my career, and you see it in other parts of the economy and other markets as well, not just housing. Now, here's a couple more things from the article. However, the desire for home ownership is very strong. The underlying demographic fundamentals indicate strong demand and low inventory in 2024 and through the rest of the decade. Remember, we just talked about the shadow demand. That's only one major factor. boding well for the housing market and increased demand. The oldest millennials are now in their early 40s, but the age of a first-time buyer, 36, is the highest on record, and home ownership rates in this cohort are significantly lower than prior generations. If millennials were homeowners at the same rate as Gen Xers, that's my generation, or young baby boomers were at the same age, there would be 740,000 more homeowners in the United States. Now, that would obviously eat up all the supply of housing inventory, and we would have a deficit of about 200,000 homes, right? You see the shadow demand, and then this different interpretation showing about how many more homeowners there would be, right? So you just can tell there's so much evidence showing this, and really so little evidence showing the other side of the argument. And listen, if the other side of the argument were the right side of the argument, that's what we'd be talking about. We're just going by the, like they said on that old, what's that old show, Dragnet, where the famous detective would say, just the facts, ma'am. Yeah, I'm definitely dating myself. Listen, that was before my time, but I did see reruns of it. Just the facts, ma'am. These are the facts, right? That is a significant amount of pent-up demand, some of which is waiting for a drop in rates and more inventory, because inventory is so low, next year. Okay, now the last part. While inventory will increase somewhat next year, supply will still be low, largely due to the other big demographic cohort affecting the market. Boomers, the baby boomers, right? Boomers are staying in their homes longer. Sub 3% mortgage rates and a lack of homes to downsize into, because there's no choices for them, and they have the lock-in effect of the super low rates. Two big factors keeping them in their homes, making them unwilling to sell, and that's contributed, right? Okay, so last thing on this article, and then I'm highlighting this entire section here, right? These demographic factors are the primary reason home prices will remain firm and will grow in most markets in 2024. There are potential wildcards to consider. Another strain of coronavirus is always a threat lurking in the corner. Geopolitical risk and economic recession could amplify consumer anxiety and lead to less home buying and less selling activity. And while presidential elections do not tend to have an outsized impact on the housing market in most cycles, it could be a different story this year if further deterioration in the political landscape. I don't even really know what that means. Does it mean more division? So the interesting thing about the last paragraph with the wild cards is that if these things happen, here's one of the things that the gloomers never say, right? Or they never just realize because they just aren't thinking this stuff through. We have a centrally planned economy, and there's always a reaction. Even Ken McElroy, right? He mentioned this to me, when during COVID a couple of years ago, when it first hit, he was predicting, oh, it's the end of the world, this year's over, forget it, right? And a lot of people contacted me about his videos on that topic, right? And he said to me later, he said, what I didn't realize is the Fed's reaction to the COVID crisis, right? That they lowered rates so much, look, just like they did after 9/11, just like they did during the Great Recession, just like they always do. They always react. They always do some kind of stimulus, right? So if any of these terrible things happen, another strain of corona is out there, right? Or we have more geopolitical problems, right? More wars, more problems, right? They will react to this. You can be confident because they need to keep the housing market going.